welcome everybody to the MI market briefing. I think, Fred, what I'll go ahead and do is just start with a basic, clean chart, some simple basic TA, and then we'll start layering our stuff into it to give it more context. Sound good?
Mm-hmm.
All right, so let me go ahead and share a screen here. And this is something I shared recently in one of my live streams. And so if you missed that, I guess you're gonna get a treat here now. So this obviously is our kind of our trend since back in December of 2018. You can see where price has interacted with the trend line here. This was our COVID crash. So a bit of an anomaly here, but the reason I don't draw this line from here to here is I do this actually on a line chart, so I can, kind of eliminate those wicks. So there's the trend, and as you can see, we've come awfully close to touching this line, but haven't done so yet. And so now I want to start introducing layers. This is obviously, this is probably the most bullish look of the market you're going to see right now. Because I mean, this is compelling, right? We're close to the trend line right now. It sits at about 61 if we were to touch it right now, and so, just around 61. And so now I want to show you where the resistance level is and form a bit of a structure, right? So obviously, at the very basic level, a breakout, or at least an attempt of a breakout, would look something like clearing that 87K level, that 83K level, and breakdown gets us down here below, the 60K range. And obviously there are some things in there that we like to see, like our moving averages, that would also help define some of those levels. Specifically the 200-week moving average, which sits down here between 58 and 59K. That's been a long awaited target since we got down into this range. It's still holding for a while. So just in the bare basics, if we were to just chop through this structure for a while longer, and we absolutely can, right? The market is going to be forced to either break out or break down from this structure sometime before mid-June. And that would be consistent with, it could happen today, right? But it could also take a while. And the fact that we're chopping in this range makes a lot of sense to me because we spent so much time here historically, right? Remember, this was the 2021 top. 69K was the 2021 top. And we consolidated here for 8 months from when we first kind of double topped here to really through the election cycle, and then on election day, and this is not a random coincidence in my mind. Election day, the Trump pump began right here, and boom, that's history. Of course, it's now been retraced, and we're looking at what's the next move for Bitcoin. And because we have all of this structure here, that shows me that there's lots of strength at this level, depending on where we are at any given moment. Sometimes it's resistance, sometimes it's support. But this is really the tight range that we're living in right now. And while this long trend line looks bullish, there's certainly a lot of bearish influence in here, or fingerprints, I should say, and none more glaringly obvious to me than this death cross that just formed. And if you're asking, well, how come price is going up with a death cross? It happens sometimes. In fact, a lot of times we'll see a fake out. We'll see price rallying into those death crosses, and then we get that fake out, and then we get a breakdown. So this doesn't have to play out exactly as it did in 2022. We've referenced that a bunch over the past month or so, but there's certainly some things that are very interesting here. And so now I want to bring in some additional layers, starting with our timescape levels. And I think that one of the cool things about timescapes is that it is, aside from being very, very simple TA, you don't have to be a technical analyst to figure it out. You can see how this is kind of like, this is, if this structure was a house, this is the framing within the house. So these levels are structural support and resistance levels that you need to be paying attention to. And you can see with some pretty good consistency how these levels tend to be respected. And they're respected until they're not, right? And then you get a break up or a breakdown. And so at the moment, this is being respected. I do think that this death cross could come in soon, could present itself here. I mean, it's already presented itself, but it could start to develop in terms of price action here very, very soon. Obviously, the resistance very strong, and we see that, in fire charts of the fact that these icebergs keep appearing around that timescape level 71.3, and you can see the order flow is supporting that as well. One other thing I want to share with you before I hand this to Fred and climb into the dashboard a little bit deeper, and this plays into the context of everything that I've shared here, is trend precognition. And trend precognition is showing us that on the higher time frame, specifically the monthly candle, we at the moment have a long signal. And let me just take timescapes out to clean this up a little bit. And so this, number one, is still a tentative signal. It could be invalidated, but this indicates that price is not necessarily, and I want to make this clear to you guys, a trend precognition signal, in this case a long, does not necessarily mean that price is going to make a new high. And I'm not speaking all-time high, just a higher high from where we're at. What it technically means is that price, there's a high probability or an increased probability that price is not likely to go below the prior candle's low in this case, which currently sits at 59.9, right? So we'll call it 60K. And so with that in mind, things could still play out. We could still have a green monthly close and going as low as, where was the close last month? 66,985. So, basically 67. We could go as low, basically to the bottom, lower end of this range, and still respect this signal. Now, again, it could be invalidated. We've seen some signals invalidate recently, and the volatility that we have, the manipulation coming from the manipulator in chief, all of those things kind of play into that. But so this is a little bit of a contradiction from the death cross, right? Because the death cross suggests we're going down. The monthly signal suggests that we're going to hold within this range. Both can be true. Both can be true for the month of March. So again, this could certainly be invalidated, and I'm certainly not ruling out the possibility of that happening, but it is something to be mindful of, in the fact that I think the priority is, and the stronger signal is, the death cross will eventually play out, as it has every time it's occurred. And this isn't one that actually happens a lot. This has occurred a few times, and each time it has some significant impact on price action. Here you can see back in 2022, which has a lot of similarities to what we're seeing right now. This is, this took us to the next leg down. But if you look back to 2018, it actually marked the bottom at that point. So either scenario is in play, right?
Yeah, it still pumped into the death cross in 2018.
Yeah.
But then retraced back to what SMA is, that 200, I guess.
Yeah. So that 200, I remember back in the early days when we were like, man, that 200 has never been broken. You can never say never, because obviously it happened, right? It happened right here, and that changed everything. So with that, I want to go ahead and turn things over to Fred to climb into some of the metrics in the MI dashboard. And Fred, it'd be great if you can explain how you're interpreting the data there and applying it to your analysis. I'll go ahead and I guess I need to release the screen.
All right. So you guys can see my screen, right?
Mm-hmm.
I always like to start out with the correlation. It has, I think, the highest impact on my trading out of these tools.
Right. Hey, Fred, real quick, if you can, just pull your mic a little bit closer to your mouth.
Better?
much.
Okay. So on the last call was on the 5th of February, right?
Mm-hmm.
And at the time, we had mentioned that Bitcoin was in the capitulation territory, which you can see here, the blue label for capitulation, and that it was likely going to be a local bottom, which, as it turns out now, it was. But let me just go back and explain the whole interface again. So on the drop down here, you can select several metrics, and currently this one is called alt to BTC correlation. On the x-axis here, you see the date in the first panel. The y-axis is the Bitcoin price, and then here you see the Bitcoin time series color coded. We'll get to that in a second. Then the center pane here is the 14-day rolling correlation of all the altcoins to Bitcoin. And on the y-axis here, you see the pairs. It only shows a handful because it will be too much to render, but you can zoom in to see all of them. And then on the right,
they're alphabetical, so it's easy to find.
yeah. And then on the right-hand side, you see the color bar going from red to blue, and it says here correlation in percent. So the lowest value is actually, it can be negative because you can have negative correlation, but it starts out with the lowest correlation, and the highest correlation is at 100%. And then there's this saying that during crisis, all correlations go towards one. That means correlations typically rise on dumps, and conversely, they drop on local tops. And that's what you see here during the formation of local tops. You see a lot of red here, which is low correlation. And this is then also color coded on the Bitcoin time series. And conversely, on crisis, so when there's severe dumps going on, you see a lot of purple here, blue purple, which means very high correlation. That's when all the alts are basically trading the same way as Bitcoin, because there's everybody's rushing to sell. Then the bottom pane here is the overall correlation in arbitrary units, which is also categorized into four labels. You have blow off, capitulation, fear, and optimism. So the red ones, the blow off labels, typically show a condensation of this heat map into this one-dimensional time series to make it easier to spot these blow-off areas. And as you can see, this happened a few times where you have extreme decorrelation, and it usually happens pretty much at the top.
So during the Fred, just real quick, during those periods, those red periods of decorrelation, mass decorrelation, are those times that are kind of like fingerprints of an alt rally? Or I guess it could also mean alts are dumping and Bitcoin's holding.
Yes, you just mentioned an important point. Yeah, correlation can go both ways. Bitcoin can hold steady while alts are doing their own thing, or alts can remain steady while Bitcoin is doing its thing. But here the correlation doesn't account for that. It's regardless of which one is static and which one is the one that's moving. But still, you get often the indication of low correlation being the top. And then we've had a lot more capitulation environments here where you have extreme correlation above like 80%, 70, 80%. And that's the blue parts here on the chart. And as you can see, well, blue purple, as you can see, this often coincides with local bottoms. And even last time we mentioned it, that this was likely going to mean revert because it was in a capitulation environment, and they did that, within a month.
Yeah. So these things don't necessarily signal like that it's exact now. It's kind of like this is what's developing, and it could take some time to play out.
Yeah, I mean, usually it takes between 1 and 2 weeks. As you can see here, it was light blue, and then the first purple dot we got was pretty much the bottom on a daily closing basis. But it stayed elevated for a while. So I suppose when you see something like that, it it's better to DCA into this, or to start closing shorts rather than do it all at once, because it can take between 1 and 2 weeks, which in this case was still pretty spot on.
So to determine if this is like if that decorrelation is bullish or bearish for alts, can you gain that alpha out of the rolling CVD chart?
Sure. So this is another metric here where you can see the rolling change in CVD over the last 2 weeks for all the USDT coin pairs. And blue here means negative order flow. That means people were market selling on those pairs. And red means positive order flow. So they were market buying. And as you can see, there's a whole lot more blue generally. And the red only starts appearing near the tops. But what also happened recently is that it just disappeared. Like people have left the space or gave up trading, at least on Binance. And then there's this large white space that has persisted since November last year, or I guess that this was shortly after the Binance dump, where the automatic deleveraging crashed a lot of pairs by 80%. I suppose people just gave up on that after that. Then the center page here shows the median rolling change across all the pairs. And what's useful here is that a lot of the time when order flow turns positive, or almost positive, here you see local tops start to form. The last time we went to near zero or even positive was the local top here, and the one that was before that was also a local top. Then there were 2 periods in 2024 where it went significantly positive, and both ended up being local tops as well. On the downside, it is not as indicative, because even though we went to a record 7 billion in the negative, it was not anywhere close to a local bottom, and it just persisted for a long time. So the sell pressure is generally more severe. But when we get close to zero or even positive numbers, that's usually an indication of a local top. And actually right now, the bottom pane here shows that the percentage of positive or percentage of coins with positive order flow is near the 50% mark, which also, like the last time that happened was in Q2 24. At the time, that was the local top, but we still have some ways, for this to get anywhere close to zero or even positive. So it may still take 1 or 2 weeks at this trajectory.
So are you saying that maybe we haven't hit the local top?
I think we're within 2 weeks.
Okay. So
based on this.
So kind of pulling this back to the initial part of the conversation, where we're kind of in this structural range. The local top, like right now, the local top is around 74K, but we have shown you guys how in timescapes, for example, we've got another cluster of structural resistance. I think it's the first weekly open of April 2024. That's around 78K, and that, I mean, we've been waiting. Since we lost the yearly open, we've been waiting for a test. I mean, we've been waiting for a test of resistance up at the 50-week moving average. Back when it was up above 100K, that never materialized. Then we lost the yearly open. We were waiting for a retest of that at 87.5. That never materialized. So it seems like the longer we go, the chances of getting up to those levels is dwindling or eroding. But even in a bear market, and this is what screws a lot of people up. Even in a bear market, you cannot ignore the fact that these bear market rallies can happen, and they're ruthless, and they trap a bunch of people, and that's how this market dynamic works.
Maybe a little caveat on this. It may not work the same way, because now something happened that hasn't happened before, which is that a lot of these alts basically have zero order flow, which kind of, it may mess with signals that have worked before, but maybe it won't work anymore this time, because now
This is
there's barely
actually
any
this
order
is
flow activity anymore.
this actually speaks volumes right here. Like, there's still a cohort of people out there who think that alt season is happening tomorrow. And looking at this view, and I don't think I even realized it till this. I mean, I felt it in my in my heart and in my analysis of what was happening with alts to a large degree broadly. But this really illustrates it perfectly. If you start on the left side of this chart where there's a lot more color, and as we get to where we are now, you just pointed it out. There's a lot of white space, gray and white space in there. And that is indicative of the fact that fewer alts are getting traded. And I think that this market, I mean, the market is maturing. And in my opinion, one of the best things that can happen is that a lot of these shit coins and scams just evaporate and go away. And that capital can then rotate into Bitcoin, ETH, and the limited number of alt projects that actually might have some merit and usefulness.
Maybe let me just say something about Timescape, to reiterate on last time. So what this is showing is the Bitcoin price action on the daily time frame, and here we have enabled Timescape with the yearly lines only. You can set the levels here yourself. You have daily, weekly, monthly, quarterly, and yearly. If we set, let's say, quarterly, we also have the quarterly levels. But let's only focus on the yearly ones for now. And we've seen some parallels to 2022. Everybody's talking about it. And so what happened back then was we dumped right out of the gate. As soon as the year opened, the price started to dump, and it actually retested the 2021 yearly open. But why? There's actually two levels here. There's not just one yearly open, but two, and this has to do with the first one appearing on the 1st of January in 21, and then the second one appearing here on the 4th. So the 4th was actually the first weekly open of the year. As it turns out, from my observations, I've noticed that the first weekly open of the year is actually also important. And in this case, it was actually the retest here of this dump during the first quarter of 22, which ended up being the bottom. And the reason why I think Timescape is valuable and actually more predictive than a regular price action trading, TA based on price action, is that a lot of people would say this was the bottom because we had PA here, right? Mm-hmm. But it turns out that the level actually came, earlier. It already existed on the 1st of January, and then was retested here, and then again retested later. And we also see a bunch of retests on this weekly level, and then again in the Q1 22 area. But what's also important is here the bear rally top was actually a rejection at the yearly open level. So this is kind of the retest when entering a bear market that occurs frequently. Not every time, but a lot of the time when we enter a bear market, there will be a retest of the yearly open, which is almost a perfect exit. I mean, it also happened back in the prior cycle, 2018 to 2020. Here the yearly open was at 13.8K, and that was actually the perfect retest on the July 2019 rally before going back to the 4,000 level, which was also a retest of a yearly open. So if you just play the yearly opens alone, you already you're able to capture a lot of the price movements. But anyway, so
that's a pretty easy trading year, right? if you just play the opens.
Another thing I had to talk about during the last call was that a lot of the time it's not worth longing below the yearly open.
Right.
because you never know where the bottom is, and you will just end up catching or attempting to catch the knives until you run out of money. So I made it a rule for myself to just not long below the yearly open. You can still be short, and TP at during periods where price is below the yearly open, but I prefer not to have a long bias because of exactly this risk. So you think maybe that was the local bottom, right? And then it drops a bit lower, and then you say, okay, maybe that is the local bottom. Maybe that is the local bottom. And there's just a whole lot of uncertainty, and the more it dumps and the more you incur a drawdown, the worse you feel about it, and the more mistakes you make in trading. So what I did instead was to just say, I'm not longing below the yearly open. I'm going to wait until either we reclaim the yearly open, which would be, if price had crossed this threshold and then ideally retested it, or just wait until the next yearly open, which was almost exactly at the bottom. And so you could have just skipped this entire period, not had this emotional turmoil, I guess, during trading, and just
I was going to ask.
Bottom.
I was going to ask how if you only long above the yearly open, then how do you buy into the recovery? And you just answered it. You wait till the next yearly open.
Yeah. So yeah, exactly. You don't have to know. It's as simple as that. You don't go crazy trying to call the bottom, right? Because you could have had a lot of bad calls here, and instead you just wait for either the reclaim or simply the next year. And the next year was almost exactly at the global bottom. And the same thing happened back in the prior cycle.
So you like that better than a DCA strategy, rather than DCAing at key levels on the way down. You're just going to ride it out and wait until the yearly open.
Well, the thing is, there's several things that align with that. So just from observations, almost in every cycle, even in stocks, the yearly open is near the global bottom, and a new year always brings a new trend, right?
Right.
Or, a lot of the time, and so when there's going to be a trend change, the yearly open is a good opportunity for that. And so similarly, you could have just not tried to long here as soon as we lost the yearly open, avoided all this headache, and just come back to long the next year's open, and it would have been way better than any DCA strategy, and you would have not flipped back and forth all the time, losing money.
That's really valuable.
It's more of peace of mind than trading strategy optimization. It just gives you peace of mind.
Yeah, I mean, it takes a lot of stress out too, because from a technical aspect, I look at the 69K range as a pretty solid level to DCA, just because it's such an important part of the structure. It's foundational, in my opinion. And at the moment, it's holding as foundational support, but by the end of the day, it could be foundational resistance. We keep flipping that range as we did for 8 months. Fred, if you'll release the screen, something I want to show you real quick.
One sec, I wanted to show where it doesn't work.
Okay. Yeah.
So 2025 was actually a good example of where it's not as simple as that. So we lost the yearly open. We even barely retested it, which was a great short entry. That was the Trump seed pump, where Trump was hyping up Bitcoin, and a lot of people, including ourselves, highlighted that this was likely going to be a fake out, which it was. But what's important here is we broke through this yearly open range here, and then retested it perfectly, and that was the perfect long entry. And we had even anticipated this. We said that yes, this can happen. It can reclaim the yearly open, but when it's going to do that, it's likely going to retest this level, which it did.
Right. And so the breakout was a high risk fake out, and the retest was a much more conservative trade.
So the point here is that even if you start entering a short because price lost the yearly open, or even start shorting here at the retest, you are not going to lose a whole lot of money, because it is, even if it goes against you, you're going to get almost perfect retest for you to flip your bias. So if you had entered a short here, let's say, and kept it throughout, you could have exited here at minimal loss.
So you're saying you would have, if you were in that trade, you would have, rather than let it go to stop loss or get licked, you would have wrote it out until the retest.
I mean, yeah, I did. So I did flip here on this retest, because I said weeks or even months ago that this can happen, and if it does, it's likely gonna retest the yearly open, which it did. But then also you just avoid a whole lot of drawdown if you just don't long below this yearly open. And on ETH, it's even more pronounced. ETH, I think, lost 70% back here, 60% just from the yearly open range. And you could have just shorted here at the loss of the yearly open and avoided all of this drawdown. And similarly, this year, we did lose the yearly open. We got a retest, and then again 40% drawdown. And so this time on Bitcoin as well, we lost the yearly open. We didn't get a perfect retest. I mean, it was kind of diddling around here on the lower level, and maybe you can consider that a bearish retest. But what hasn't happened yet, it was concise retest of this level, a bearish retest. And it may still happen, if price does go on to do a enormous bear rally, which I guess in this market environment could happen. This might prove to be a good area to fade that move. The area between 87K and 91K. And if you're wrong about, let's say we're wrong about this, and it just goes through, then you would expect a retest of the 91.6K level. At which point, if the trend goes on to make bullish recovery, that would be a good area here to flip.
Yeah, and I think this is what confused a lot of people. Like, we expected, as I said earlier, we first expected to see a retest at the 50-week moving average. It didn't happen. We came, let's see, at that point in time, the 50-week was up at around 101K, and price made it up to like 98K. And I forget what happened at that time, but there was something probably tariff related. I don't, or maybe it was a carry trade. I don't remember what it was, but there was something that robbed us of that opportunity. And so we lost that, and that was early January, right? So we had that January open, and we never really got the test that we were looking for in terms of going back to those two timescapes. We had some decent support testing around the yearly open at 87.5, but didn't quite make it back up to that first weekly open of the year at around 91.3, I think it was. And so how high did we go back then? We went to, well, actually we did get up there, 91.1. So we did get a test of resistance there. I stand corrected. And then came into another support test before it broke down. And so I guess that 91.3 was already tested. And in terms of 87.5 getting tested, do you still think that there's a good chance, similarly to what you just highlighted about that U-turn, you still think there's a good chance that we hit 87.5 before the next breakdown?
I don't know. All I can say is that if we get it, this would be a good opportunity to short, because even if if we're wrong about this, it's likely that we're going to get a retest where you can get out at break even, basically.
Cool. So let me. I want to let you get back into some of the other metrics, but I wanted to share something while I'm thinking about it on fire charts, actually. And I noticed this the other day. It's always good to zoom out and get some perspective from different time frames from time to time. And I'm looking at the chart, and we know we spotted a couple of TWAP periods in the short term, and you can see this out of the yellow class really pretty prominently in these couple of periods. Like this was a TWAP. This looked like a TWAP out. This was nearly 40 million in 2 hours, almost a vertical line. But looking at the monthly chart, I noticed that the green order class of $1,000 to $10,000 orders, just on really a nearly contourless diagonal trajectory, which
it's even more pronounced on the 6-month window.
right. So this indicates that this was a TWAP strategy. You can see there's a little, like on the monthly, you can see a little bit that there is some contour in it. So it's not 100% of the order class, right? Obviously, there's other traders in this class, but it seems to me that this order class for the last month has been dominated by a TWAP bot that's accumulating. And if we switch to absolute CVD, we can see that they have accumulated roughly $600 million worth in the past 30 days. But look at the divergence between some of what the other order classes are doing. The purple whales are out 31, down net 31 million in that same time frame. The red class down nearly 800 million in that time frame. So there's at least one entity that is accumulating in this range. And that to me speaks to the viability of DCAing at this level. But I really like your strategy of just playing the timescapes and not having all the stress of whether you're right or whether you're wrong. I think most of us who feel that we are in a bear market, and I guess those that don't feel we're in a bear market are delusional hopiumatics, but I think we feel that the bottom isn't in, but we also feel that on a macro scale, Bitcoin will again make an all-time high at some point in time, but I just don't think it's happening in 2026. So I want to flip it back to you, Fred, and if you want to climb into some of the other metrics that you're looking at in the dashboard, I know that you like to look at the beta a lot and also the realized volatility.
Yeah, so the beta is actually a continuation of the correlation. So actually the beta, the correlation is part of the beta calculation, which is why it looks so similar. So let's just focus on the color coding maybe. Low beta means basically decorrelation, where all are almost cash. Like zero beta means cash. Beta of 1 means that it's basically trading as Bitcoin, and anything above means that it is exacerbating Bitcoin moves. So in this case, we see alts basically reverting to cash-like behavior, zero beta, and that also was pretty indicative here of the local tops. It's always a bit too early because tops don't form the same way as bottoms, so it's always slower. Where bottoms you always get a whole lot of time you get like capitulation moves where price just goes straight down. But with top formation, it's slower, and usually here you see the zero beta being left to the tops. It's always a bit early. Same here and the same here, but it's an indication, to start being careful when you see zero beta, basically. Conversely, if price is dumping, then you have high beta, and that's the purple periods here, which a lot of the time is also indicative of the local bottom, same as here, started appearing during our last call, basically on the 5th of February. And right now, here the bottom part shows the share of high beta pairs. The blue line is at 70%. So 70% of coins currently have high beta. And what you want to see during the formation of a local top is kind of this dropping back into the 60% range, which hasn't happened yet. I mean, it happened here for a brief period of time, which was like a mini local top, but I think this is gearing up for another local top here, maybe in the next 2 weeks. Another metric I like to look at after the correlation is the returns on drawdowns. So to explain the chart layout first, the X-axis here is the date again. This is Bitcoin time series. On the y-axis, you see the Bitcoin price on log scale. The second pane here is the 2-week rolling returns for all the pairs. The color bar shows negative 20% to positive 20%, and the center is at 0. And this is the rolling return here. So meaning that you have everything that's blue is negative rolling returns over a 2-week horizon, and everything that's red is positive rolling returns. And then on the third pane, you see the rolling drawdowns. So this is how much basically drawdowns the alts suffered, during the same time. 0 means there was no drawdown during the 2-week period, and 50 here is 50% drawdown over the 2-week period. And what you can see is that first of all, it's very correlated. The drawdown appears across almost all pairs at the same time. But recently, we haven't had a whole lot of returns, and we have not had a whole lot of drawdown. It's just basically been quite tame. But then the bottom period is what I'm actually looking at most of the time, which shows the percentage of coins with positive returns in blue, and the percentage of coins with drawdowns less than 10% in orange. So what is important here is that low drawdowns typically lead to returns. So meaning that if there's periods of low drawdowns, what follows next usually is periods of higher returns. So if you zoom in a bit here, you can see this. First, we had alts bottoming out, meaning that they had low drawdowns, less than 10%. And then they started to move. The blue line came after the orange one. And that's here where a top started to form in both Bitcoin and alts, where almost all the coins had positive 2-week rolling returns. And then the same thing here. Last time we mentioned that the orange line was starting to move up. And this time again, it led the returns. So the drawdowns always come first, or the low drawdowns, and that is then followed by the returns. We haven't yet seen this go into the 80 to 100% range, and that if you project this, I guess it takes another 2 weeks or so before April anyway. So if it continues at the current trajectory. And this is, I really like to look at the correlation and this drawdown chart here, at the bottom pane, because it shows you when alts are basically bottoming out, giving you a heads up that the whole market might start to move soon.
Everybody's ready, and like this when we're sideways in a range, I mean we're pretty volatile within this range, but when we are in this kind of consolidation, people get impatient, and that's when they make mistakes. And so we're about out of time, but I just want to show one more thing really quick of how I'm really integrating all these tools into a system. And you've got a lot at your disposal with the MI dashboard, and of course we have fire charts and trend precognition and the MTF mean reversion indicator. And I want to show you a way that I'm using some of these tools that may not be top of mind for some of you guys. So yesterday I made a call, I think it was yesterday, that I felt like things were getting toppy. And I actually, what made me start to think about that was first checking in on an MTF trade that actually hit perfectly. This is a 1.5% deviation, and absolutely beautiful call. Sunday, this was Sunday evening my time, and that was at 65.6, and price began to rally, as you can see. And I noticed this cluster of yesterday. I noticed this cluster of red alerts, and these are like dump alerts. It's kind of a signal that things are getting overheated, a little bit unstable, and as you can tell, it's not a perfect call, right? It happens, price recovers. It happens, price recovers. It happens, price goes back closer to mean. So there was a series of these happening, and I felt like we're coming out the top of the channel. This really is concerning in terms of keeping a long open. And so this was the first indication. And then I did another unconventional move. Trend precognition is most definitely optimized for higher time frames, but I do like to use it with an adjustment of the probability score on the A2 plus algo. I'll crank it up to, somewhere in the 55 to 65% range. And when I'm making these adjustments, I'm looking to see signals in the places that you would expect to see signals. And on that 1 hour time frame, I saw a signal that was well correlated with the noise we were seeing here on MTF, and felt like, okay, there's two pieces of the puzzle that are telling me things are looking toppy here. And then to round it out, I looked at fire charts and I could see we had this additional liquidity coming in overhead. Whales had started selling, and that was all I needed. So I used all of those pieces of information together to help me make the determination that things were getting toppy. I closed the long scalp, and now we are short from up in this range. And Fred, one more thing I wanted to ask you about, when you said that you're really just kind of riding it out and waiting for the either a retest on those timescape levels up around the yearly open, or maybe a wait until the upcoming yearly open to make a trade. Are you scalping long and short within the price action that we have now? Or are you just kind of like,
yeah, of course. I'm not just abandoning trading because we're below the yearly open. All I'm saying is that this sets my bias.
right,
I'm rather short below the yearly open, and so below the yearly open, I sell rallies, and above the yearly open, I buy dips. Or to simplify, let's say every bear market has a red yearly candle, right? It sounds dumb, but that's what it is. And bear market price action can accelerate massively to the downside, and this is just not where you want to be catching nice, because the market might just be in a downtrend for a whole lot longer than you have funds for. And but so this is just it basically sets my bias. And above the yearly open, I trade, I buy dips and have a long bias, and below the yearly open, I sell rips and have a short bias. But that doesn't mean I stop trading. I just shift my risk management, basically.
right. That makes a lot of sense. And just to punctuate it, you just said bear markets have red yearly candles. Let me do this. Let me just switch trend precognition back to the default settings for a higher time frame, and show you this, which concurs with your observation that bear markets have, this is the yearly candle. And this is why I think we don't see an all-time high in 2026. It's also why I don't think we see one in the first half of the year on the 6-month chart. Now, this doesn't mean that we can't find bottom within that time, but I think just historically, based on what we've seen in prior cycles, it's more likely that we establish a bottom somewhere around Q3, Q4. Before we start to see that recovery.
That was actually the other thing I was going to say about, there's many factors that play into this phenomenon, that you see bottoms around the yearly open, or around the open of the next year. Bitcoin has this seasonality that it usually takes about a year between the top of the bull market and the bottom of the bear market. And so the top, as you said, was Q3 or Q4, I think. Yeah, Q4 in 25, and that would suggest it. We'll see the bottom in around Q4 26, and the same thing happened in the previous cycle. Bitcoin topped in Q4 21, and then the bottom was in Q4 22.
Mm-hmm.
And the yearly open, the beginning of the next year is just so close to that. It's within the same quarter, basically.
Right. All right. We covered a lot of ground today. And Fred, I appreciate you bringing us all along for the ride and helping us get inside your head on how to interpret these tools and use them the best. And much thanks to our Premium Plus community, going to make this available in a recording in a private channel for you guys, and we'll have transcripts available for you as well. All right. In the meantime, make it a great day. Trade safe. Stay safe if you're in a hot spot around the world. And I hope this stuff helps you trade smarter.
All right. Thank you, everyone.
Thank you. Goodbye.
Bye.
Bye.
Ciao.